Good morning, everyone. I'm Bagger Don at Stock Market Caddy. Today is Saturday, December 27th at about 11:30 a.m. Everyone is talking about silver and gold. Well, I hope you own it. If you do, you might be wondering, do I add more? Do I hold it? Do I sell it? And if you're not in silver, you might be asking, am I too late? Should I buy it? Let me share with you our tool called SMC Swing Machine Plus, combined with the Fairway Radar. Let me explain to you what it is showing and maybe help you make a decision. You see, folks, because I'm not going to make the decision for you, nobody can. But at Stock Market Caddy, we are a mentoring service for those folks who want to learn how to trade or invest their own game. We're not making specific recommendations to buy or sell anything, unlike everybody else. We're doing something much more valuable. We're teaching you and our members how the game is played. And it is a game. It's always been a game, folks. We want to teach you the lessons that we have learned over years, decades, and much more valuable, we want to provide you some of the tools. This is just one of 70. Let me show you something. By the way, I need to come in here. I had this set at silver. We have silver futures and we have silver ETF. So let's first look at the futures on our tool. So we need to come in here very simply and change this one input to futures, true, and we'll set the stocks for the moment in the ETF to false. The silver futures daily closed, or all silver, but the silver futures closed at 79.675 on Friday, up for the day 7.99. The signal to buy the silver futures contract came to our members 152 days ago. At what price? $35.12. At what time? 5 p.m. On what date? May 21st. Now, it says that the percent return is 126%, give or take. But that's the difference between the entry price and where it's trading. But because this is a leveraged futures contract, the real return is obscene. A mini contract purchased at this time on this date would have cost you about $12,000. You would be up $210,000. On a weekly basis, it was 94 weeks ago, March 15th of 2024 at $28.95. You would be up 241 on just one. Silver monthly 22 months ago. As you can tell, it was March of 2024 that silver really started to take hold. $243,000. Now, most retail traders, investors, are not playing in the futures market. They probably should be, but it takes a little bit of education and a little extra commitment. They're leaving a lot of money on the table. But they like to play in the ETF space, and that's okay. So what we need to do to recalculate the P&L, because see, the P&L, this is just showing the number of points. The percentage is correct, but number of points. So let's go in here again, and we'll come back as we did in the beginning. And let's change the futures to false. And let's change the stocks to true. And let's put in the amount of money that we maybe would have put in. And let's assume we're putting in $25,000. You could also put in a share account, but this will keep it apples to apples. So we'll put in 25,000. Now that's going to distort the, oops, I'm sorry, I was a little too fast there. Let me come back and do that again. I'm sorry about that. Let's do that again. I didn't hit the OK button. And we'll hit true. And I got to hit OK. So this is now distorted, but the ETF is correct. So the SLV on a daily, the signal was 153 days ago. Notice the futures right about at the same time. 4 p.m. on May 20th, $113 is the entry price. 137% return. That 25,000 is now worth 34,000. If you did it on a weekly, would have been also back in March of 2024, you'd be up 222%. And silver on a monthly was December, and you would be up 225%. It's a beautiful thing. Now you may be asking, what do I do now if I'm in this or if I'm not in this? So let me share with you a perspective in how our members will use this tool as an example, and you can do this with anything. But understand, it's critically important to understand your own objectives. Let me repeat that. It's critically important to understand your own objectives. You should define your own financial objectives, not from me, not from a broker. Only you can know. That's going to depend upon how old you are, what you are trying to achieve. And are these monies on the ETF, for example, are they in a taxable account, a tax-deferred account, or an entirely tax-free account? The trend is certainly up. This is measuring the trend. It's very, very good. But look where we are on the greed meter. We're in euphoria on a weekly, monthly basis. What does that mean? It doesn't mean that it won't go higher. It could. But it does mean that statistically, the likelihood that it pulls back toward its mean on a monthly or weekly basis, which could take months or weeks, the likelihood that it pulls back could be as high as 95%. It may not, but it might. So on a daily basis, it has yet to get into euphoria, which means it could go higher. It could, but it also could start to pull back. And on a daily, it could be 65, or on the ETF, 59. So what might you want to do if you are in the ETF, for instance? One of the things that you could do is take out your original investment of $25,000 and let the profits run. You could certainly do that. Or you could simply just cut the position in half. Or you could just trim a little bit, like 10% of it. You could do that. Or you could do what Warren Buffett does. You see, Warren Buffett doesn't sell, but he does do something else. He likes to sell covered calls. When they get into euphoria. And you can sell those covered calls at the money, and they'll pay you money for it, or just a little bit out of the money, and you can stretch your profits a little bit more. Or you could sell them deep in the money and giving you more insurance on the pullback. And if we do pull back, you can close that covered call for pennies on the dollar. And when you do these selling of the covered calls in euphoria like this, it's like getting a dividend on steroids. And you can see on all time frames, daily, weekly, monthly, we are at major resistance levels, meaning it's extended. So if you are not yet in silver, now or Monday is not the time to plow in. Yes, it would have been better to have done it days ago, weeks ago, months ago, but it doesn't mean that you've missed it entirely. It just means that it's important now to exercise a little bit of discipline, get educated, ideally get these tools, and wait for the pullback. And that will be your opportunity to do what? To take action. Folks, I am Bagger Don at StockMarketCaddy.com. We are a mentoring service. We're here to teach you how to trade and extract money from the money flow and to get away from trading on greed and fear alone. If you are getting it done with whatever it is you're doing, keep doing it. But if you aren't, on a daily basis or a monthly basis or even a yearly basis, stop, think, visit StockMarketCaddy.com and I'm happy to speak with you, and I think we could help you so that next year, when you're looking at the hot market, you will have bought it at a much better opportune time. Call anytime. 813-758-8263. Thanks.